So friends, so let's start with Nifty. So Nifty ended up in red today after a strong rally of 8 days, which is okay because that's how a share moves. It cannot move in a straight line. It will fall a little bit, then consolidate, then move up again, then move, then fall down, then move up. So this is how it will go. But in the long run, you will see a pattern which will be going like this. But in the short term, you will see dips, and which is healthy for any index and any shares also, because then it means that the risk is less, because if something is going up and up only, then the risk starts increasing, and when it will fall very steeply. So if it is going up and then falling a little bit and then going up and then falling a little bit, then it is safe, and we can also call it a healthy correction. So till the time Nifty maintains 18600 level, which was its earlier resistance, I don't think there is anything to worry about. And today most of the people must have seen green in their portfolio, even though Nifty was down. And the reason is simple, because Nifty contains 50 companies, so you can say it's a portfolio of 50 company. If you don't have those 50 company, then even if Nifty goes down or up, it will not matter, because your portfolio is no way linked or synced to Nifty. It will go up and down based on the shares that you have in your portfolio. So, and that is what would have happened today. Most of the beaten down companies are starting to recover, and some of them are Astral, Polycaps, Yashu Industries, LTTS, LTI, and we have been discussing them regularly in our videos. Now, since they've already recovered half day and the discount percentage has reduced, we will focus on other companies which are still available at their support, and in this video we'll discuss about such two companies. So let's start. Our first company is Neogen Chemical, and today you can see it was flat. And if you see 1 year return, it's in negative of 26%. If you look at 5 years, then you will see a very good return of 393%. And the period is also not 5 years, it's just 3 years. Within 3 years, it has provided a massive return of close to 400%. This company is a small cap company with a market capitalization of only 3000 crores, and it is in the business of manufacturing bromine and lithium based compounds, or chemical you can say, which are used in different industries. And lithium, you are aware, it is used in the batteries which are used for the electronic vehicles. So here you can see that Neogen Chemical manufactures bromine, lithium based organic and organometallic compound used in pharmaceutical, agriculture, chemicals and engineering industries. And one good thing is that this company is doing capex, which means company is expecting that in future its business will grow, which for an investor is a very positive point. So basically, instead of getting excited on bonus and split, as an investor, as a retail investor, we should be excited more when a company is doing capex, when the company is doing acquisitions as well, because these two things means that company is going to grow in future, and ultimately the profit revenue will grow, which will eventually have an impact in the share price as well. Now here you can see that it has done a capex of 35 crores, and it is likely to be ready by FY23, and this will enhance their total revenue potential to 700 crores and to 725 crores in FY24. So this company is down because of the quarterly result. There was a dip in the OPM percentage. This dip in the OPM percentage we are seeing all across the companies. So it's not that it is company related problem, there is something wrong with the company. It is a generic problem, and everyone is facing this issue. Because if you'll see that the sales is still continuously increasing, there is nothing wrong with the business. Business is continuously increasing. Quarter on quarter result, if you'll see, the sales is increasing. The profit is not increasing at that speed because there is a dip here, which again is a temporary problem. Same with the yearly numbers, you'll see that yearly numbers are growing every year, and for the 12 trailing months also you'll see an increase, and similarly profit is also growing. Although the OPM from 19, it has come down to 17. In the coming days it may again reach back to 19 level. So this is the time to buy, because whenever there is a temporary problem with a good company, that is when you should make your investment. So here you can look at the sales growth, it's in double digits, and in profit growth also you can see it's almost 30% profit. In last 3 years, 4 years, 5 years it has been 42, 10 years 29, and CAGR also you can see 3 years has been very good, 53%, and this year we are seeing a minus of 15%. Return on equity is also very good, above 15%. Now we are at the shareholding pattern. So shareholding pattern also looks decent. Promoter holding is consistent around 60%. FIs are also invested in this company, although they have trimmed their stake a little bit, and DIs are also invested, but you can see that DIs have increased a little bit. So from FII it has changed hands to DII, which is a good thing, and the public stake has been constant in this one. So shareholding pattern also looks decent. So here we are at the chart of the company, and you can see it is taking support. It is available at its support, which is the exact support, which is around 1300 level, and it is down from its top around 33%. So still you are getting it at a good discount. So if you like the company business, you can think of investing, but do remember one thing, it's a small cap company, so the investment should also be small in these kind of company. But fundamentally there is nothing wrong with this company. If you are already invested in this company, then you can continue to hold for long term. Our next company is Home First Finance, and this company also was flat today. And if you'll see 1 year return, it is in negative of 10%. If we see 5-year return, which is not actually 5 years because this got listed in 2021 in the month of Feb, so it's almost around 2 years, and it has provided a return of 38%, which is not that bad also, but this is still the starting of this company. So this company, as the name suggests, is into providing home loans, and it offers home loans within 48 hours. This is its USP, or the moat you can say. And what it does is it focuses on first time home buyers in low and middle income groups, and offers housing loans for purchase and construction of homes, which comprise of 92% of its loan. So this is one area or one income group which was neglected or was not too much into focus, and this company is focusing on this particular segment of the customer, which is middle income groups, and that is why you see that it is increasing at a very rapid rate, and it is the fastest growing housing finance company in the sector. And here you can see the average ticket size of housing loan was 10 lakh, and now we are at the shareholding pattern. And the shareholding pattern, you'll see that promoter have around 33.58%, DI is close to around 10%, and in DIs you will see that this has decreased from 40 to 6%. But if you'll check properly, then you'll see that from DIs it has moved to public. So public was 15% earlier, and now it is around 50%. So there's just a movement of two fund houses. So in DIs you'll see Orange Globe and Bessemer India. So these two fund houses have now been shifted under public holding. So they held around 36% in total, and in public now you'll see these two. So it's just the movement from DIs to public that you see here, and because of which you see a drastic change. So nothing to worry about here as well. Shareholding pattern also is fine. Now we are at the chart for Home First, and you can see that it made a low around 650, and from there it has started recovering, and now it is trading around 756. But from the top it is still available at a discount of around 24%. So if you like the company, you wanted to invest in the fastest growing company, then you can do that. But this also is a small cap company, so do remember to invest only a small portion of your capital, so that if it increases, it boosts your total portfolio. But in case for any reason, because this is a small cap, anything can happen, if it goes down, then it does not impact your entire portfolio returns also. So that's it in this video. We'll meet in our next video with some new information. Thank you.